CNBC TV 18, celebrating 16 years of business leadership.
Hello and welcome to Markets. Today I'm Lata Venkatesh.
And I'm Surabhi Upadhyay. Let's start with the headlines. The market consolidates after yesterday's fall. The Nifty closes a shade below 7,800. The Sensex ends with a 50-point cut. Banking stocks remain under pressure.
Midcaps recover and almost 1% higher. Shrey Infra surges 10% on big volumes as details of their deal to sell stake in the equipment finance business emerge.
Everest Tanto and CNG-related stocks rise as the Supreme Court sticks to the diesel ban and tells the Petroleum and Natural Gas Ministry to open over 100 more CNG outlets in the NCR region.
Globally, Shanghai ends a 0.25% lower after a volatile session. European markets too pair gains as China woes persist despite the PBOC injecting liquidity into the system.
Crude prices remain under pressure, handing back gains triggered by geopolitical tensions, weakness in China and dollar strength weak. Okay, those were the big headlines. A very, very range-bound day, Lata, and a completely quiet end after what was such a turbulent start to the week. What did you think of it?
Well, actually, in the morning, all eyes were on China. People weren't watching anything else. And that stock market gave you 10 turbulent minutes with the stock markets going down 3% and then rising 1%. But thereafter, the PBOC appears to have stepped in and controlled. But what could not be wished away is the inherent slowdown globally. The PMI numbers that came yesterday, whether it was China or India or whether it was the US, all of them showed contraction below the number 50. Now, PMI, Purchasing Managers Index, is a proxy for industrial growth. So naturally, there is a serious interpretation of the data as slowdown worries. And you could see that today getting reflected in the crude market as well, which is why Indian stocks and Indian PMI, after almost 28 months, showed a contraction. Yeah. So you cannot forget inherently the Indian slowdown message that came from yesterday's data. China, notwithstanding, there is an internal problem. So that's what took the banks down. However, there were these pockets of strength in the mid-caps and the metals. Metals largely on expectations that probably some minimum import price support will be announced. It's very clear that it is just that there is liquidity available with the mutual funds and therefore the mid-caps were at play. But there are slowdown fears.
Well, that was today's action on the show today. Vibhav Kapoor of RNFS, who believes that equities will be dominated by global events in 2016. Rahul Chadha of Mirae Asset Global Investment says that there will be more volatility in the Chinese market. And Sanjay Sagar, the joint MD and CEO of JSW Energy, talks about the Monnet Ispat deal.
After tumultuous start to the week, Dalal Street was relatively calm today, if you can call that. Anuj Singer is here with the market wrap. Anuj, would you say it is some respite after yesterday's terrible fall?
Well, yes, the day after clearly was much better than the day that we had yesterday. The bulls would take it despite the fact that the Sensex and Nifty ended in the red. And why would they take it? Because the mid-caps outperformed by a big margin. So individual stocks would have made them a lot of money in today's trade. Though the Sensex and Nifty did end in the red, and the prime reason, I guess, was banking names. So, led by PSU banks, we saw a big decline in banking names, though middle stocks were up in trade today. Let's talk about some of the stocks then. PSU banks right on top. Another 52-week low for PNB, that was down 2%. Bank of Baroda as well down 2%, and State Bank down about 1.5%. Apart from that, in terms of some heavyweight action, the Nifty losers included TCS down 1%, Tata Motors as well down nearly 1%, and Lever was down about 1% as well. On the gaining side, metals clearly stood out. Tata Steel was the top Nifty gainer, up 7%, so big gain for Tata Steel. Vedanta was up 4% and Hindalco as well was up 2.5%. Some other prominent Nifty winners included Reliance, which was up 1% and was betting for bulls. Asian Paints, which has been one of the strongest stocks over the last couple of days, and GAIL was up 3.5%. But it was all about mid caps. Take a look at some of the some of the big stock movers. Shrey Infra was up 10%, IFCI 7.5%, IGL 7%, so big gains over there. Subex, India Cements, HDIL. There were a lot of names actually going up between 5 to 6%. So for today, the market looked better, but the global screen is not settled yet. That's the indication you got. and tomorrow could be another interesting day. So for now, of course, it's each day as it comes, but today definitely was better than yesterday.
All right, Anuj, thank you for that. It's time now for some market opinion. Vibhav Kapoor of ILNFS says that 2016 will be a year dominated by global events. And he also adds that on the downside, the Nifty could go as low as 7,100 or 7,200.
You see a lot of volatility in the global markets, and I expect that to happen, mind you. And then I'm saying maybe you could even go down to 14 times, say, FY17, and if FY17 is going to be, say, 500 rupees, you could conceivably go down to 7,000, although I expect that not to happen. But if you're really looking at a downside, yes, 71, 7200 could be possible. I think quite a few of them are now trading at more expensive valuations than even some of the large caps. So as this difference increases, there will be pressure on the mid caps. So I think this time you may not get as much outperformance as you got last year. We don't see even IT outperforming. I think there are too many headwinds. We've been talking about this for quite some time. The whole model for the IT sector is changing, and so companies will need to adapt themselves to the new model, and that's going to take quite some time. And plus you have the global uncertainties, which can always impact IT adversely. Pharma, I think, is the best is over for the time being. In fact, I would go as far to say that maybe the bull market in pharma is over for some time to come.
Okay, so that's Vibhav sounding a bit cautious on several sectors. Well, today mid-caps had a field day, so let's pick the best of them. Shrey Infra, that one surged close to 10% on huge volumes today. The company held a conference call this afternoon on the recent deal they announced with BNP Paribas. Ekta listened in that call, and she's here with the key takeaways. Ekta.
Well, I'll start with the structure of the deal that the management dwelled on as opposed to the valuations. They said that the money that they receive from BNP will go into Shrey Trust, which will then go into the parent company, Shrey Infrastructure, and that amount of money will then go into buying the 50% stake from BNP in Shrey Equipment Finance. So that means that if the 5% stake is bought for around 100 crores or maybe 200 crores, then that amount will be used to buy the 50% stake in Shrey Equipment Finance, and it will not exceed that amount. Additionally, the management said that there is no change in management control in Shrey Equipment Finance. They do not have any immediate plans of merging Shrey Equipment with Shrey Infrastructure as of now. And remember that there were a lot of concerns with regards to the valuations that were brought up, and the management did clarify that the deal with BNP is expected to be value accretive. BNP is not taking a hit, and they see value of a larger play in terms of buying that 5% in the parent company. They will continue to draw on BNP's strength, with them holding 5% stake in Shrey Infra, and they conducted lenders meetings to get the required approval. The two board members of BNP on Shrey Equipment Finance will continue, or that will be decided going forward. Other takeaways included that they're looking at more value unlocking exercises. They will get approximately 1,800 crores from the Viom stake sale, and the regulatory approval should be over by March. Gross NPL stand at 1,300 crores on a consolidated basis, and they see asset quality improving.
All right, Ekta, thank you so much. So, Shrey finally getting excited in trade with the fact that BNP wants a larger play in the infrastructure space and in the parent company itself. Let's now move on to an exclusive. Sources tell us that Mercator is looking to exit its Singapore subsidiary. Varinder Bansal is joining in with the details. Varinder, tell us more.
Well, thank you so much. The talks were going on since last 1 year, but, the reinforcement of that comes after the CEO of the company, that is Mercator Singapore, had resigned, which is effective December 24. Now, remember, Mercator Singapore, that has been a loss-making entity, huge debt of nearly 1,000 crores over it. If you look at the company in a totality, other businesses like, energy, coal handling, logistics, dredging, all are doing well. But it was only Mercator Singapore which had a debt of nearly 1,000 crore, reported a loss of nearly 600 crores in 2014, which has been a constant drag on the company's operation and financials. If the management of Mercator is able to exit this business completely, you could see huge improvement in terms of financials of the company, because the debt will come down from 3,500 crores to 2,500 crores. They have a lot of assets in terms of oil and dredging which are there in the company, so that will be a good thing. But as I said, this is a source-based information. We have not got any confirmation from the management. They were unavailable to comment. Keep an eye on this stock, because this will be material for the company if they exit, because the losses will come down, debt will come down for this company.
Thanks a lot for that, Varinder. On that note, let's listen into some management commentary. Credit Suisse yesterday downgraded JSW Energy to underperform, citing that dynamics are turning adverse for the company's southern power operations. The management spoke to us and said that while the merchant rates have fallen, they do not see any immediate threat to the new capacities added in the south. The CEO also gave an update on the Monnet Ispat deal.
When you analyze an asset, there are various aspects that you consider. And we are still not satisfied with everything that we've seen. So we've yet to take a final call on it.
Well, it was a manic Monday for the Chinese market yesterday. Today, that market saw a toppy day of trade where shares darted between gains and losses before finally closing with a minor cut. China's central bank conducted the biggest reverse repurchase operation since September, adding 130 billion yuan to the financial system. Other Asian markets too were on a comeback trail, recovering from that sharp sell-off that we saw in the previous session, but many of them actually had to go home with minor losses. Sri Jagarajah now joins in with a wrap of all that Asian action today. Sri, run us through.
Asian shares retreating in choppy trade on Tuesday, led by Chinese stocks whose early rebound fizzled out as investors remained unconvinced by Beijing's moves to restore market confidence following what can only be described as a disastrous start to the new year. An uneasy calm settled over the markets after the People's Bank of China injected $20 billion, the equivalent of that volume, a generous slug of liquidity into domestic markets to keep borrowing costs down, but that didn't last long in terms of the effect on the market. After a 7% plunge in Chinese shares on Monday, the Shanghai Composite Index swung between positive and negative territory before closing down 0.3%. Blue chip CSI 300 index ended the day higher, fractionally by 0.3%. Japan's Nikkei also gave up tentative earlier gains to end the day down 0.4%. Australian shares hit hardest today, closing 1.6% lower, dragged down by the banks and the resources. That's where we stand at the close of play in Asia. Back to you.
All right, thanks a lot for that. That was the Asian day. Let's take a break on that note. We'll come back and tell you about several other stocks in the Indian markets that were in the news.
CNBC TV 18, celebrating 16 years of business leadership.